Hey traders, finally, we're going to learn the advanced SMC ICT premium strategy and its mechanical rules. That will boost your accuracy to the next level. Plus, we've added 4 powerful new features to improve your precision in every trade. The first feature is True SMC Trendline. Our indicator marks powerful major trend lines, which act as key institutional levels and retailers' liquidity. Then the second most powerful feature is choch confirmation entry. It's one of the most powerful smart money confirmation entries. With this feature, you can easily identify whether the market will respect the zone or not. Then the third feature is the multi-timeframe dashboard. It's based on true smart money concepts, and using this, you can easily identify the right market direction. And the fourth powerful feature is the breaker block. Most traders waste time marking everything manually, and some even mark it wrong. But with the advanced SMC ICT indicator, you can mark everything easily. Because it has lots of powerful features, which will change your trading to another level. First, let's understand the true SMC Trendline. It acts as a major liquidity zone for institutions. Here, the market is bullish after a break of structure, so we can expect a bullish move from either of the zones. Now the question is, which order block should we trade from? Remember, institutions execute huge positions after grabbing liquidity. In this case, we have trendline buy-side liquidity. Institutions mostly sell after trapping buyers. Similarly, we see equal low trendline liquidity, and institutions usually buy after trapping sellers. By applying the same concept here, we have major trendline liquidity, and the institution turns bullish right after taking sell-side liquidity. Second, it acts as a major key area for the institution. But if you start marking trend lines manually, it becomes time-consuming, and you'll often be confused about which trend line is valid or not. But using this indicator, you can perfectly mark all major trend lines with the live market without any lagging. Now, let's understand order block and trend line liquidity setup. In step 1, market should be bullish after break of structure. If higher time frame is also bullish, then buying is more high probability. Then, in step 2, we have to identify trendline liquidity above order block. And from here, we can turn on the trendline liquidity feature. Then, in step 3, wait for valid liquidity sweep. So, what is valid liquidity sweep? The first valid liquidity sweep is Scoob sweep, in which candle A sweeps the trendline or the next candle strongly closes above it. The second valid sweep is bearish engulfing. Now, the third liquidity sweep is choch and order flow confirmation, in which after liquidity grab, market breaks the first pullback, then enter with new order flow. So after using any of the proper valid sweep confirmations, we can take entry from either Scoob or direct Scoob. And this is how we can trade with the institution using proper confirmation. If you also want to catch such powerful moves with high accuracy, then don't miss out. Message me on Telegram to purchase this game-changing indicator. And if you buy today, you will get a 50% instant discount. Offer valid only for today. Link is in the description. Now, let's understand the advanced probability enhancer, which will take your accuracy to another level. Here, the market is bullish after a break of structure and gives proper bullish confirmation. So, can we take an entry from here? Remember, when we have relative equal lows below the order block, then buying from such a zone becomes low probability because institutions need liquidity to execute their orders. And in this case, we have relative equal low liquidity just below the zone. In such situations, we should avoid buying. Now, let's understand the most powerful strategy, which is the mechanical market structure plus trendline setup. To understand this strategy clearly, first we'll go through some important concepts step by step. The first concept is, when the market is bullish, it usually takes a pullback after either mitigating a higher time frame order block or after taking buy-side liquidity. Here, in this bullish move, the market takes a pullback after mitigating a higher time frame order block. And when the market grabs higher time frame liquidity, it often takes a deeper pullback before continuing any strong bullish move. The second concept is, institutions mostly buy from the discount zone and sell from the premium zone. We have a few exceptions. In this bullish move, the zone below 0.5 is known as the discount zone, and the zone above 0.5 is known as the premium zone. Buying from any key level in the discount zone is high probability. Remember, Sometimes we have to adjust these concepts based on current market conditions. Here, the market is bullish after a break of structure. After the boss, we can expect a bearish move once it takes higher timeframe liquidity. This bearish pullback will be confirmed if the market closes below the first pullback, which is known as lower timeframe choch. After the choch, we will keep selling until it mitigates the higher timeframe key levels in the discount zone. The selling move after choch to the key level in the discount zone is known as a counter trade. Now, let's understand the premium strategy, which will take your accuracy to another level. In a counter trade, the market mostly sweeps buy-side liquidity and then falls, and it gives a liquidity run to the sell-side trend line. Let's understand the second strategy, which is based on liquidity strength. When we have strong liquidity, the market shows a strong impulsive selling move right after sweeping the high. But if the liquidity is weak, we can expect a further bullish move to grab more liquidity before the next bearish move appears. Now, let's move on to the third strategy, which is based on breakout strategy. If we have less swing trend line and weak selling move, then after a breakout, we can expect pullback to the first supply zone before a selling move, because institutions need buyers to execute their selling orders. And if we have more swing trend lines and a pool of liquidity below them, then we can expect a direct breakout with a strong candle. Here, the market forms strong trend line liquidity, and with proper sweep confirmation, we can expect a selling move. Now, after boss, we have weak liquidity, so we can expect either a double liquidity sweep or a bullish move to the order block. After a valid sweep confirmation, we will sell from here. Selling is high probability because the market gave an choch and hasn't yet mitigated the discount zone. Now, the market has mitigated the zone, so we have two possibilities. The market will either turn bullish or bearish. To identify the right direction, we will use the choch confirmation entry. After choch, both internal and swing structure shift bullish. The bullish move after choch up to the swing high is known as the pro trend. In pro trend, the market shows the next impulsive bullish move from the demand zone, while the supply zone helps to pull back the price toward the demand zone or even break it. Institutions take sell-side liquidity to fuel their next impulsive buying move. BSL is used to trigger a pullback to the demand zone or to run liquidity before continuing higher. Now, after choch, buying from the bullish order block will be high probability. In pro trend, buy-side liquidity acts as a liquidity run or facilitate a pullback to the bullish order block. If the market sweeps sell-side liquidity, then we can expect a direct breakout to the upside. This is how we trade using trendline and smart money concepts. Now, let's understand the next powerful feature of our indicator, which is the choch confirmation entry. So, how does the choch confirmation entry work? Here, the market is bullish. Wait for it to mitigate the zone. After mitigation, the first pullback is identified as choch, and our indicator automatically marks it for you. If the market directly breaks choch with a strong green candle, then buying from the new order block or order flow becomes a high probability setup. This is how we trade with confirmation, using our advanced SMC ICT indicator. Now, let's understand the powerful premium strategy. Most traders make the mistake of using choch confirmation entry in the wrong place. In a counter trend, we have to check choch confirmation entry from a bearish order block. In a pro trend, we have to check choch confirmation entry from a bullish order block. Now, let's break down the second strategy. Here, the market is bullish after a change of character, so buying after choch is high probability. But why does the market break the zone even after giving choch confirmation? The first reason is that we have relative equal low liquidity below the zone, and institutions always target such liquidity. The second reason is the strength of the bearish move is greater than the bullish. But for a valid entry, this should not be the case. This is how we can use choch confirmation entry in the right place. Now, we are going to understand the next powerful feature, which is the multi-timeframe dashboard. First, let's understand what is a bullish and bearish swing. Here, after a change of character, the market turns bearish, so the swing becomes bearish. After a boss, the market again turns bearish, so the swing remains bearish. Once it gives a change of character, the market turns bullish, so the swing becomes bullish. Again, after a boss, the market continues bullish, so the swing stays bullish. This is how we identify whether the swing is bullish or bearish. Now, let's break down what is bullish and bearish internal. After the break of structure, both swing and internal become bullish. When the market breaks inducement, internal becomes bearish, so we can expect a selling move till any order block. When the market is above choch, internal becomes bullish, and buying becomes a high probability setup in the pro trend. After the break of structure, both internal and swing turn bullish again. When the market breaks inducement, internal turns bearish. After mitigating the zone, if the market breaks above choch, internal becomes bullish again, and buying becomes a high probability move. Again, after the break of structure, both swing and internal stay bullish. Once the market breaks inducement, internal turns bearish. But if the market breaks above choch, internal flips bullish again. This is how we can identify market direction using the multi-timeframe dashboard. Thanks, traders, for watching this video. Don't forget to like and subscribe. See you in the next one.